Hey, have you ever felt confused when you hear traders talk about support and resistance levels like they're the secret code to the markets? Well, what if I told you that by the end of this video, you'll not only understand these concepts but also master them like a pro? Yes, today we're diving deep into the world of trading to unravel the mysteries of support and resistance levels. And trust me, this is something every trader, beginner or experienced, should get a grip on, to turn the tide in their favor. Let's start at the very beginning. What exactly are support and resistance levels? Imagine you're playing tug of war. The point where the rope hardly moves, despite the efforts, is similar to what we call support and resistance in trading. Support is like a floor where the price of an asset struggles to fall below, while resistance is like a ceiling where the price can't seem to break through. Now, why is this important? Because recognizing these levels can help you predict future price movements. Let's dive into how you can identify these levels. First up, the simplest way is to spot them visually on the chart. Look for where the price has stopped and changed direction multiple times. That's your first clue. But it's not just about spotting them, it's about drawing them correctly. Horizontal lines are your best friends here. And remember, the more times the price tests a level without breaking it, the stronger that level is considered. Now, into some strategies on how to trade using these levels. One popular method is the bounce-off strategy. This involves entering a trade as the price bounces off a support or resistance level. But, caution is key. Always look for confirmation in the form of candlestick patterns or indicators. Another strategy is the break and retest. Sometimes, when a level is broken, the price will come back to test it before continuing in its new direction. This can be a golden opportunity for traders. Of course, no strategy is complete without talking about stop-loss and take-profit points. Setting these around support and resistance levels can safeguard your trades against sudden reversals. Now, let's step into the real world. I'll share a personal story where recognizing and leveraging these levels turned a potentially losing trade into a profitable one. It was back in 2018, and I was eyeing a particular stock. Through diligent analysis, I identified strong support and resistance levels. When the stock neared a support level I had confidence in, rather than panic, I saw an opportunity. By entering a trade at this point and setting my stop-loss just below, I managed to ride the bounce back up for a considerable profit. This experience taught me the invaluable lesson of patience and the importance of trust in your analysis. Let's cap off our journey with some additional tips to enhance your trading using support and resistance levels. Always update your levels as the market evolves. Use them in combination with other indicators for a comprehensive approach. And practice, practice, practice. Phew. We've covered a lot today, from what support and resistance levels are, to how to identify and trade them effectively. Now it's your turn. Start applying these insights to your trading strategy, and watch how your understanding deepens and your results improve. Before you dive into the markets, don't forget to like, share, and comment below with any stories or questions you have about support and resistance levels. Your engagement helps us all grow and learn together. And remember, mastering these levels is not just about better trades, it's about becoming a better trader. See you in the next video.